Hi, this is Charles with West USA Realty, and today I have a very special guest, Mr. David Krushinski. How's it going, sir?
Good, man. How you doing?
I'm doing
for
pretty
having me.
good.
I appreciate it.
Yeah, so do you want to introduce yourself and tell them how long you've been doing loans?
Sure. My name's David Krushinski. I own a mortgage brokerage called DK Home Loans, and I've been in the mortgage business since 2002, so quite a while now. And fortunate enough to work with Charles and his team over at West USA, and they're great agents. So glad to be here today.
Thank you. So today I had a bunch of questions. There's a lot of things coming down the pipeline, and David has closed many deals for me and my team. So I figure who better to ask about all these lending changes than the man himself, David Krushinski. So the first question everybody wants to know, what are the rates? What are the rates right now?
Yeah, I mean, it's crazy right now because a lot of people are thinking that rates are going to go down even more, and
wow.
I could see that happening. So rates right now are in the 3s to 4s. It just depends on credit scores and things like that. I mean,
the 3s.
To really
That's
define
crazy.
a rate. But honestly, I'm thinking they're going to go down. I mean, and the reason why, Charles, is there's little inflation. Right, when there's inflation, that creates rates to go up. It looks like the economy's slowing down. There's all these things with China and tariffs, and
That's true, huh?
That a lot of that could hurt the consumer. But if you look around the globe, there's negative rates in other countries, right? Like I think Denmark has a negative interest rate where they're actually paying people to take a mortgage.
That's crazy.
So it's like a negative 0.5%.
Wow.
Meaning that if you started with a loan balance of $100,000, you only have to pay back $99,500.
Wow.
So it's crazy.
Okay,
So
that makes sense.
You're still making a payment, but you're actually paying less money back to the bank.
Yeah.
At the end of the day.
Like, why not finance? So,
right. So that'll drag down rates here too.
Huh.
Because investors will be in search of a higher yield. So if they can't get a high yield in their country, they'll go elsewhere to find that, and then that'll cause supply and demand. The more demand there is, the lower the price comes.
That makes sense.
Or the higher price comes. And bonds are inverse, so it's kind of weird.
Yeah. So this is why I have this guy here, because he's talking all this amazing stuff. That's why you want to get with an expert. But definitely, David is always a wealth of knowledge. And speaking of that, there's been some other changes in regards to FHA financing. So before, it was like you could not use your FHA loan to buy a condo or a townhouse. But when we look at certain neighborhoods, that's the best, not the best price per square foot, but those are really good deals. When we're looking at a single family detached home starting at maybe $200, $250, you can get granite countertops in a townhome that people love for maybe $165, $170. So what do you see with the changes for buyers being able to get into those properties?
Well, I think it's a great thing that FHA is doing this once again, and like we had talked earlier, this is not a new phenomenon that FHA just started doing. They used to do this previously, and then before the economy hit in 2006, and they stopped doing it after that. But basically, it's where they'll approve a particular unit in a condo without having the whole entire complex approved. So what they're generally looking for, like the hard part about the whole complex, getting the whole complex approved, is that it costs money, right? It's like $2,000, and the HOA might not want to pay that. So the nice thing about a spot approval is you can say, if one of your clients looks at a condo and it's not approved FHA, if the condo's in good standing and it meets the criteria of FHA, even if that whole complex is not approved, they'll approve that unit.
Okay, cool. And with that, it's a matter of just sending that property over to you to make sure that it's good to go.
Right. And we're still going to look at owner occupancy and investor
the
concentration
and all that.
And if the HOA is in litigation, and they're still going to look at that type of stuff, but they just won't require the whole community to be approved in order to do one loan in that community.
That makes sense.
Yeah.
So awesome. So I actually tapped into my database, called a couple clients. If you guys are watching this, thank you, because I actually reached out and asked them some questions to ask you, to find out just some more information, things that buyers actually have, or sellers at this point, some people. So speaking of that, if somebody wants to refi, would you actually? This is what my client asked. He's like, would you recommend a cash out refi for them to take that money and invest back into their property, or what do you see with the rates if they're maybe 3 years in, 3 years of paying their mortgage? Should they refi their house because the rates are so much lower now?
Probably. I mean, 3 years ago, rates were higher than they are now, so more than likely they'll be able to save money in the overall interest expense. One of the things that people kind of get nervous about is that if they've been in a loan for 3 years and they're like, well, I don't really want to start over again, right?
Yeah,
I don't
that's
want
what
to
I hear.
start over at 30 years. Well, the cool thing is we can actually do a 27-year loan. So if they were like, hey, I don't want to start over again, I can do a 27-year term for them, and they're not starting over again. They're still continuing.
So it doesn't change.
Right. And another thing is I mean, we normally look at the calculations to make sure that the rates it's beneficial for our clients to do the loan. We're not recommending people to refi for 1/8 or 1/4%.
Yeah, it has to make financial sense.
Right. But like if they're considering taking out cash and making home improvements, I mean, it would depend on those type of improvements that they're going to make, and as well as I do, they could put money into the house and it not add any value.
Exactly.
So what I would encourage those clients to do is to maybe get with us, get with you, and find out if the improvements they're going to make are going to actually add value. And sometimes people just need to update their equipment, whether it's an AC unit or a roof or whatever, and that's a mandatory thing.
Kitchens.
Yeah. Kitchens add a lot of value. So, I mean, obviously you're probably well versed more than I am in that,
So we always do talk about two types of value. It's the value to the buyer coming in if you're looking to sell, or if you're not selling, it's the value to you, right? How much do you want to pull? How much do you want your kitchen remodeled or granite and tile and all that? But then the other value is the value to the bank, the appraised value. When they go to look at, this granite versus that granite, for the most part, granite's granite, and you're going to get that on the on your appraisal as being an upgrade over Formica, stuff like that. But when it comes to a personal preference, that's where granite's going to be a bigger value on the buyer coming in, because they wanted this type or the bull nose edging and all that stuff. The appraiser doesn't care about that stuff. So that's where the difference comes in when you're looking at doing upgrades for value versus personal enjoyment.
Right. Yep.
So cool, awesome. So another question. This is actually from one of my first-time buyers. They were asking. When they're getting the loan, they hear all this stuff, and they want to know when they purchase, say they get these great rates, does their payment change after they move into the house?
Does their payment change?
Their monthly payment. They're asking if their payment, say, is $1,200 to buy their house, not including like the HOA and all that stuff. Next year, does that change? Does the rate change? Does anything change for their $1,200?
Got it. That's a great question. So as a first-time home buyer, these are things that you probably wouldn't know, but there is going to be change to your payment. There's going to be change in terms of property taxes.
And nobody talks about this, guys.
Right.
We're telling you the truth right now.
And so the property taxes will likely go up. They would only go down if home values went down, which I don't see that happening, but so that'll change, and then your homeowner's insurance will also change too. So like what normally happens is every insurance company does it, where they start ratcheting the rates up.
Yeah.
And then you've got to kind of like determine if you want to research and find another insurance company and move your policy around, or maybe you have a broker that does that for you, and then that way you can kind of keep your rates low.
Yeah.
But those are the two things that will generally change. The principal and interest won't change unless you have an adjustable rate mortgage. But most people are opting for fixed right now because the yield curve's inverted, so it doesn't even make sense to do an ARM right now.
Because we're so low.
You're right.
That makes sense.
So that will never change, and then obviously your HOA could change too if
HOA.
Yeah.
So actually, I had a client. And because when people buy new builds, that happens a lot because taxes are for the year prior, right? So what happens is you move in and say your payment's at $1,200, you're paying taxes for the year before, which is just dirt. And so when you have a house built, that payment jumps because your taxes increase because the value of the land or it became improved because of the home being there. So stuff like that. So yes, that does happen. So these are really good tips and good information that you're giving us. And yeah, is there any question that you get from buyers coming in or refis going on with properties?
I get a lot of different questions. I think a lot of people now are wondering, hey, should I refi right now? Because if you're going to say rates are going to go lower, when do I know?
Yeah.
And I would say that's a really tough thing to answer because we don't know when the rates are going to be at the lowest, the bottom.
Yeah.
Right. Just like
people are playing that game
we don't know
before.
when home prices are going to be at the bottom in 2010 or 2011. If it makes sense financially for you to do it, what I've been telling my clients is that let's look at not adding a bunch of fees to your loan. And then if, let's say, for example, normal refinance is $700-800.
Yeah.
Well, if rates go down another 0.5% or not even another full percent, then they're not like, oh my God, I just spent $5,000 to refi.
Yeah.
You know what I mean?
That's true, huh?
Yeah, we've been trying to set all these refinances up for our clients with minimal costs because then they're not like, oh my God, I just,
all the
wasted
closing
up.
costs in it. Yeah,
right.
That's true. So,
yeah, so that's one of the things that I would say if you're thinking about doing a refinance.
Yep. We have a client right now who's actually doing that. They're going to be refinancing and putting their loved one on the loan as well. So without getting into specifics. So
cool, man.
So yeah, that's all I have for you guys today. Thank you guys for watching. If you have any questions, feel free to reach out. Trying to give you some value and bring you some content. David Krushinski, thank you so much with DK Home Loans. If you guys need a loan, refinance, this is the dude. This is the dude right here. So thanks for watching, and you guys have a good one.